Welcome to a new perspective on building successful startups. This video explores why prioritizing sustainability over rapid growth might just be the key to long-term success. Forget the mythical unicorn. It's time to embrace the resilient camel. In Silicon Valley, the startup ecosystem has long been obsessed with cultivating unicorns, companies valued at over $1 billion. This concept has shaped the philosophy of building startups for years. A unicorn is a startup company valued at over $1 billion. This unicorn objective has led to a philosophy of extremely rapid growth, fueled by abundant venture capital and a deep talent pool. It's an approach that has worked well in Silicon Valley, but is it sustainable everywhere? This growth at all costs model is starting to lose its luster. We've seen failed IPOs, pushback against tech models, and social issues plaguing the valley. For 99% of entrepreneurs outside Silicon Valley, this approach was never practical to begin with. The realities outside major tech hubs are different. Capital is less abundant, and the context is night and day. The quote, grow at all costs model simply doesn't translate. Furthermore, there's growing pushback against tech models that restrict competition, prioritize growth over profitability, and ignore things like electronic waste. So what's the alternative? An increasingly popular playbook comes from what's called the frontier, ecosystems outside the major tech centers. For these startups, the camel is a far more appropriate mascot. A camel is a resilient startup that prioritizes sustainability and survival by balancing strong growth with healthy cash flow. Unlike imaginary unicorns, camels are real, resilient, and can survive in the harshest environments. They prioritize sustainability and survival from the very beginning, balancing growth with cash flow. Camels adapt to multiple climates, can survive without food or water for months, and can sprint rapidly when the time is right. This metaphor, while less flashy, is far more grounded in reality. Lesson 1. Don't subsidize. Unlike Silicon Valley startups that often offer free or subsidized products for growth, camels charge their customers. They understand that a product's price reflects its quality and positioning. Lesson 2. Manage costs. Camels manage their costs throughout their life cycle, syncing expenses with revenue growth. They leverage cost advantages in their locations, often hiring talent at lower rates than in major tech hubs. Lesson 3. Raise only the money you need. Camels are strategic about venture capital. They raise appropriate amounts for specific purposes, allowing them to maintain greater control and a larger share of the pie at exit. Lesson 4. Take a long-term view. Camels understand that building a company is not a short-term endeavor. Survival is the #1 goal, allowing them to evolve their business model, find product-market fit, and scale effectively. Camels still grow at impressive rates, but they are strategically managed to last longer and withstand market shocks. They preserve the option to modulate growth. The world needs more camels. This content was based on opinions expressed in a 2020 article which appeared in Entrepreneur magazine, written by Alexandra Lazaro.